This video is made only for educational purposes. No stock ETF should be bought without advice from your investment advisor. Attractive PSU Stocks. NMDC. NMDC has taken cumulative price hikes of 14% and 12% for Icon or Lump and finds over Jan to Feb 2022 period, and still the domestic iron ore price is at a steep discount of 43% to international iron prices. This points towards a firm iron ore pricing environment and bodes well for gradual margin recovery for NMDC. Robust iron ore sales volume and potential margin recovery reinforce our confidence for strong earnings performance in Q4 of FY22. Steel plant demerger expected by Q1 of FY23 would not only help unlock value but would also reduce the cash burn for steel plant and improve return ratio and increase cash flows. Coal India. Government of India decided to dissolve the current system of Coal India's auction on non-linkage coal through multiple windows. Currently, auction is conducted under 5 different windows like Spot, Special Forward E-auction for power sector, Exclusive E-auction for non-power, Special Spot E-auction and Special Spot E-auction for coal importers. In the new policy, all the auctions would be collapsed into one single auction, which will put all sectors at par. Barring e-auction for power sector, all other segments will garner strong realizations due to significantly better profitability of non-power sectors. E-auction for non-power constituted 60% of Coal India's total e-auction volumes with realizations at 1.5 times of power sector. We expect an incremental revenue EBITDA of 10 billion, factoring an additional realization of 220 rupees per ton on 40 million ton of e-auction volumes on account of higher reverse prices. Bank of Baroda. Bank of Baroda reported a PAT of 2,197 crore, up to 100% YOY on account of lower provisions and strong NII growth. NII grew by 14% YOY. NIM rose by 28 basis points QOQ to 3.1% in Q3 of FY22 due to higher credit to deposit ratio. Margins were also supported by the bank's stance of going slower on term deposits for some time now. We believe that as the corporate credit picks up, the margin is expected to expand going ahead. Overall advances grew by 4% YOY. The domestic loan book rose by 3% YOY, aided by retail book growth, which grew by 11% YOY. Further, corporate advances increased by 6% QOQ and flat YOY. However, the bank expects growth momentum to sustain going ahead. Overall asset quality improved with GNPA and NNPA declining by 86 basis points QOQ and 58 basis points QOQ. The bank has increased the provision cover to 71% versus 67% in Q2 of FY22. The management expects the recovery to be good in the MSME and retail segments going ahead. Share, give a like, leave a comment. Please subscribe our channel